Hello, good afternoon and welcome to the weekly roundup for the week ending Friday the 13th of August. Hope that you're enjoying the weekly reports. Please do subscribe to receive regular stock market content, and any questions pop them in the box below. Finally, as well, invite you to head over to the website, sign up for any free stock market research in the research centre. Any particular topics of interest, please let us know as well. Right, well, this week, broadly speaking, developments in the market have been few and far between, really. Pretty typical for this time of year. Principal focus was on the US CPI inflation, which came in slightly softer than forecast on the monthly basis. Core inflation was also softer than expected. However, PPI inflation data came in higher than forecast, catching the market slightly off guard. The Federal Reserve appeared to be moving towards tapering bond purchases, and given that US stocks hit fresh all-time highs this week, the market appears to be comfortable for now. So the S&P gained 0.5% across the week, Dow Jones up 0.8% across the week, and the Nasdaq actually slipped 0.1%. Over in Europe and the UK, well, again, record highs in Europe for the DAX, the Stock 600, the FTSE 250. Meanwhile, the FTSE set for its best weekly win since last November as the summer rally rolls on. Strong earnings and a weaker pound have really helped the FTSE push higher. Insurance, retail and travel stocks have been good performers. So FTSE is actually up 1.4% this week and the DAX up 1.6%. Over in the Forex markets, US dollar is set to book mild gains across the week as investors digest the mixed inflationary data. The US dollar index is set to record gains of 0.1 after a 0.7% rally in the previous sessions. Trading has been subdued and could remain that way in a typical summer trading as investors look towards the Jackson Hole Economic Forum later this month. Pound against the dollar set to book weekly losses despite the upbeat GDP data this week. The UK economy grew 4.8% in the April to June period after contracting 1.6% in the first quarter. So June month-on-month GDP beat forecasts at 1% versus a 0.8% forecast. With the euro against the dollar set to book a mild loss of 0.1% on the back of the stronger dollar again. Economic sentiment data for Germany and the Eurozone saw a sharp decline in the outlook and growing concerns over COVID cases rising again in the autumn. And also the ongoing supply chain issues also weighing. In the commodities markets, oil set for very mild gains of under 0.5% this week after tumbling over 7% across the previous week. Concerns over the Delta variant saw the IEA downwardly revise its crude oil demand outlook across the second half of the year. However, OPEC was more upbeat in its monthly report, shrugging off the COVID risk and sticking to its previous demand growth guidance. Gold after tumbling another 2.8% in the previous week, gold is set to book losses in the region of 0.4% this week as it continues to hover around levels last seen in April. The precious metal continues to be driven by the narrative over potential Fed monetary policy normalisation. Rising COVID cases offer some safe haven support, but the strength in the dollar is really putting the pressure on the gold. In the UK markets on the equity side, well, we've seen delivery surge over 16% so far this week amid a double whammy of good news. Firstly, delivery alerted investors that German rival Delivery Hero has built a 5.1 stake in the company. This move comes amid a wave of consolidation in the industry. Deliveroo also reported orders doubling in the first half of the year as demand holds up even as the lockdown restrictions ease. Morrison's hit a fresh all-time high this week as the takeover battle is now extended, with CD&R being given more time by the UK regulator to bid for the supermarket chain. So the deadline is now August the 20th to make an offer after the US private equity group Fortress increased its bid by almost £10 billion. So that fight is really hotting up now, and it really comes down to whether CD&R are going to come back with a counter bid or not. Over in the US, Disney is set to gain over 6% this week after a blowout on Q3 earnings, beating all expectations across subscriber growth, revenue and earnings. The parks, the experience, the product segments also returned to growth for the first time since COVID. So that's it for this week. Thank you very much for watching. Please remember to subscribe, and any questions, don't hesitate to ask. Have a great weekend. Thank you.